Good morning and welcome to Morning Markets with True Potential. Checking on news and developments over the past 24 hours. We had a very light economic calendar yesterday. Amidst that, we saw equity markets and risk assets moving between gains and losses throughout the day. But those were mainly moves arising from rising geopolitical tensions. Overall, equity markets ended the day in the negative territory. Amidst these increased geopolitical tensions, we saw bond yields also rose yesterday, as we saw some of the Federal Reserve governor members talk down the talks of any easing in rate hikes further down the line. Emerging markets were hardest hit as Chinese equities and Chinese assets overall took a dive yesterday, as US House Speaker Nancy Pelosi landed in Taiwan yesterday. We saw Chinese retaliating with sending their military aircraft over the island. So I think geopolitical tensions are building up across emerging markets, and then we need to keep monitoring how they evolve from here. Moving away from geopolitics, we saw some welcome relief on inflation front. As we have been speaking over the last couple of days, we have seen some moderation in commodity prices, and some of the easing in supply chain issues are keeping the manufacturing costs, input costs lower. In fact, we saw July PMIs, the Purchasing Manager Survey indexes showing that factories are actually seeing some softening in input cost prices, and that is feeding into the lower selling prices, average selling prices across the board. This is the third consecutive month where we have seen softening in inputs and selling prices overall. So it's a positive developments overall, and down the line we expect some of that feed into the selling prices over price pressures down the line. What is feeding into these softening of pressures? As we spoke about, the commodity prices, the energy costs have all been coming down. They're down from 20-25% to their highs. So they have been welcome relief for the factories. Also, they've seen some demand cool off in certain sectors, but still a healthy demand overall in the economy. Though one caution across the board, we see Purchasing Manager Surveys show that wage pressures are still continue to be one big concern for the factories overall. Moving away, this morning we saw a surprise pickup in Chinese services PMI, and also we saw a surprise pickup in German export orders. And that is feeding into the overall positive momentum as we started today, though that has been tailing off a bit lately. But we'll see how those positive momentum continues from here on. Later today, we also have OPEC Plus meeting. We will see if we get any positive surprise on increased production level from OPEC Plus. The hopes are a little bit high as we move into this meeting, because we saw President Biden visited the region over the weekend, and there was some noise that he may have spoken to leaders there to ramp up the issues on the production side. Though we saw a Saudi foreign minister came lately and downplayed some of those hopes, and then reiterated the commitment that OPEC has that any increases will be based on the market balances of supply and demand overall. We will leave it there for now. We will keep you posted on any market developments from here on. Thanks very much for watching.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.